Welcome to Nicola Wealth's tax reporting webinar, which has been put together to assist you and your accountant with tax planning and return preparation. My name is Lauren Tatry, and I'm a financial planning associate here at Nicola Wealth. Today, I'm joined by Mark Eccleton, manager of Nicola Wealth's client reporting team. Mark is a designated CPA with 5 years of public practice experience at a Big Four accounting firm and has over 15 years experience within the wealth management industry. Throughout his presentation, he will be walking us through the reports we provide our clients and accountants. And we will finish today's session with a Q&A focusing on commonly asked questions that we address each year. Mark, over to you.
Thanks, Lauren, for the introduction. Our firm is proud of our client tax reporting, which we call fiscal reporting. We believe our fiscal reports are industry-leading, designed specifically to assist our clients and accountant partners with tax planning and filing preparation, while saving time and money. Some highlights include disclosure of US dollar accounts converted to Canadian dollar, as tax returns must report in Canadian dollars, breakdown of allocated income types that reconcile to tax slips, detailed footnotes to provide further information for estimated tax cost figures, intuitive transaction descriptions for ease of reading, and hyperlinks and bookmarks to report sections for ease of navigation. Our reports are very comprehensive, and I will take the next 10 minutes to walk through a sample report. We provide a PDF and an Excel file which have different purposes. The PDF file shows detailed calculations and gains and losses. The Excel file shows prior period adjustments and a portfolio level reconciliation of tax cost. Additionally, if you have foreign asset reporting requirements, we will include an additional report. This is a sample of our Nicola Wealth fiscal reports. There are summary reports and detailed transaction reports. Three main objectives of these reports are to, first, show the gain or loss that occurs when an investment is sold in your portfolio. Second, show the taxable income allocated from your investments, which will also match what you see on your tax slips. Thirdly, to show the Nicola Wealth management fees that can be deducted on your tax return. There are other uses for these fiscal reports, but these three are the main ones. In order to jump to a fiscal report, you can click on the desired report. The Statement of Gains Losses report shows investments that have been sold or disposed of in the period or have been deemed disposed of in the period. A gain or loss is calculated based on the proceeds of sale less the tax cost pertaining to the sale. The tax cost of an investment is known as the ACB, or Adjusted Cost Base. For details on the ACB amount, a later report will show how it was calculated. The gain or loss can be used to populate your capital gains losses schedule on your tax return. The next report is the distribution summary. This report shows distributions, whether taxable or not taxable, and allocated income from your investments. Each distribution is classified based on its characteristic and will correspond to a box on your tax slip. Note, return of capital is not taxable, reduces ACB, and may not show up on your tax slips. When filing your tax returns, this report is not to replace retrieving and reporting your tax slip information. This report will provide comfort that the ACB calculation for an investment is appropriately being adjusted by the taxable income. Accurate tracking of ACB will ensure you are not taxed more or less than necessary when you ultimately sell these investments. It is important to note, Nicola Wealth investments are generally formed as trusts, mutual fund trusts that is, or limited partnerships, LPs. Mutual fund trusts distribute all taxable income received via cash or reinvestment. LPs, on the other hand, are not taxed like mutual fund trusts. LPs are taxed on each partner's proportionate share of allocated income and not the fiscal distributions via cash or reinvestment. After the partnership's tax year, income is allocated at the partnership level and then allocated to partners on a pro rata basis. The allocation of income occurs regardless of whether the partnership made actual distributions. LP distributions are not taxable, considered discretionary, and effectively reduce ACB. The next report shows transactional level distribution details, whether it be cash or reinvested, or a notional tax-only transaction. An example of a notional transaction relates to income allocations from limited partnerships, which are not actual cash or reinvested distributions. Additionally, and as mentioned previously, we show US dollar distributions in Canadian dollars and the applicable FX rate for these conversions. The next report shows the unrealized gains and losses, as well as net ACB transactions in the period. Additionally, any prior period adjustments to ACB are disclosed. This report is useful for tax reporting as it provides a snapshot of investment market values relative to their ACBs, or in other words, investment's unrealized gain or loss position. The next report is the most detailed of all reports and shows all the transactions related to each investment ACB calculation. Each transaction has a friendly description, whether it be a buy or sell, distribution in cash or reinvested, or a transfer, just to name a few. If there is a sell or a disposition, the last column will show the applicable gain or loss. These gains and losses are shown on the first report, the statement of gains and losses. The cash detail report shows all the activity in your NBI and custodian cash accounts and includes detailed descriptions for each. Each buy, sell, or distribution notes the applicable investment the transaction pertains to. Additionally, the US cash is also shown converted to Canadian dollars. Since the CRA requires foreign exchange gains or losses to be reported, we have also shown gains and losses on any outflow of US dollars. As an example, a conversion to Canadian dollars or a purchase of US dollar investment. The next section is the statement of management fees incurred. Each month, Nicola Wealth charges a management fee based on assets held in your accounts and our fee agreement schedule. The fees shown are accrued in the noted accounts. This report will not show when fees are charged from an account outside of the accrued account. For tax reporting purposes and income deductibility, the CRA allows for deductions based on an accrued or a cash basis as long as there is consistency year over year. Now on to the Excel report, which contains two parts. One, an ACB reconciliation, and two, a prior period adjustment report. Based on feedback, accountants value the detailed information in this spreadsheet. The purpose of the first worksheet is to show how the ending ACB was calculated at a portfolio level based on the currency of the portfolio. Examples of figures shown are taxable distributions, transfers, fees, and taxes. The gains or losses on dispositions will match what is shown on the statement of gain losses in the PDF file. Note the opening ACB balance includes any prior period adjustments. The following worksheets show a summary and in detail of any prior period adjustments. The prior period adjustments will help you and your accountant determine if any tax return adjustments are necessary to provide comfort that the ACB is accurately being tracked. If there were any adjustments that occurred after the previously prepared report was generated, they will be disclosed here. This is most apparent if there is a corporate fiscal report generated mid-year. As seen in this example, this corporation has a June 30th year end. This fiscal report is made available a few weeks after the tax year end, in this case, July. Since the tax slips are not available for the current calendar year, the breakdown of income is based on the most recent year available. The following year, the opening ACB is adjusted to incorporate the income breakdown that should have been included. Looking at Nicola Canadian equity income, there are 3 reclassifications of distributions based on the actual tax slips. Eligible dividends reported in the estimate report were about $8,300, and the actual tax slips, when available, reported about $6,400. As a result of this timing difference, this gives rise to about a $1,900 prior period adjustment. In this example, this reclassification does not affect ACB, but in the case of high yield bond, the reclassification includes return of capital, which is not taxable and thus alters its ACB. To summarize, if fiscal reports are prepared prior to the tax slips being available, this will create a prior period adjustment on the next period's fiscal reports. Now on to the foreign asset reporting. There are two separate reports we may issue. The first report is called the T1135 Foreign Property Report. This report is for Canadian taxpayers that own foreign assets in a non-registered account and may assist you in reporting to the CRA using a T1135 Foreign Income Verification Statement. The second report is called a Form 8938 Specified Foreign Financial Assets Report. This report is for U.S. taxpayers that own foreign accounts, registered or non-registered, and may assist you in reporting to the U.S. government. Your MBI and clients' accounts are formed in Canada, thus will be included in this reporting. That concludes our walkthrough of the fiscal reports we provide you and your accountant. Now over to Lauren.
Thanks for walking us through everything, Mark. Like you said, our client reporting fiscal package is incredibly comprehensive, and there are quite a few reports included in each package. I'd now like to shift gears and go through some frequently asked questions by both clients and accountants over the years. Jumping right into my first question, how is the income shown on tax slips incorporated into the fiscal reports?
Our fiscal reporting team works very hard, not only to incorporate the taxable income as shown in the tax slips pertaining to the client's Nicola Wealth funds, but also investments pertaining to other external investments. For our Nicola Wealth investments, if a fiscal report is produced after the tax slips are available, the reports will incorporate the taxable income as shown on the tax slips. If a report is produced prior to the tax slips being available, we will put a notation on the report indicating the reports are an estimate, and we will use the most recent tax year income as a proxy to estimate the taxable income breakdown.
So during tax season, are the reports estimates or based on current tax slips?
For reports pertaining to your personal tax returns, these will match our current year tax slips, and we will make the personal fiscal reports available only after all the taxable income captured for the current reported tax year. For corporate or trust fiscal reports, given the earlier CRA payment and filing deadlines versus the personal deadlines, we make these reports available in late January, which is prior to tax slips being available. For these reports, the taxable income may not be based on the current reported year, thus considered an estimate report.
Thanks for this insight. How do I know if a foreign asset report should be included with my fiscal reporting package? The reports I'm referring to here would include a T1135, FBAR, or Form 8938.
If you are a Canadian taxpayer and invest in foreign domiciled investments in non-registered accounts, then you will receive a T1135 report. Important to note, our Nicola Wealth pooled funds and limited partnerships are all established and formed in Canada, thus not considered foreign domiciled asset. This includes Nicola U.S. Real Estate LP, U.S. Equity Income Fund, and U.S. Tactical High Income Fund, which are all established and formed in Canada. If you are a U.S. taxpayer, you're required to report non-U.S. accounts, both non-registered and registered. Our client custodian, MBN, or National Bank, is a Canadian bank, so these accounts will be included in your fiscal reports and shown in the FBAR Form 8938 report.
If neither of these reports are included in a client or accountant's tax package, does this mean that they don't have to file any of these foreign asset reports?
As it pertains to Nicola Wealth portfolios, if there is no report included in the tax package, then there is nothing to be considered in foreign asset reporting. Now, each taxpayer must be cognizant of assets held outside of Nicola Wealth, as those could be subject to foreign asset reporting. Additionally, if a client is considered a U.S. taxpayer, please ensure your advisory team is aware of this, and we can issue you an FBAR Form 8938 report.
Thanks, Mark. Let's go back to tax slips. Exactly when will tax slips be available?
T3 slips are required by the CRA to be sent to taxpayers no later than 90 days after the tax year end, and T5013 slips by March 31st. Our pooled funds issue T3s, and we aim to have them available by early March. Limited partnerships issue T5013s, and they're available at various points throughout March, with the last one being available in late March.
Are we able to get the last tax slip earlier than late March? And if not, would you mind explaining to me why?
One Nicola Wealth Limited Partnership slip arrives in the last week of March. The Nicola Value Add Real Estate LP invests in many limited partnerships. In order for this fund to issue its T5013 slip, it needs to wait for the underlying investments to issue their T5013 slips. Thus, this causes the Value Add Real Estate LP slip to be issued in late March. As of right now, there are no means to have this slip made available any earlier. We will notify clients via email when this slip is ready.
Okay, so this timeline is important to note for those clients who hold our Nicola Value Add Real Estate LP. By the way, where can clients and accountants retrieve these tax slips and reports?
All Nicola Wealth investment tax slips and their fiscal reports are available online through our secure client private access website. Accountants that have written client authorization to exchange information have been set up with their own online portal, which is unique to the individual accountant.
What if an account tax preparer changes or someone experiences issues accessing the portal?
We take our client information security and privacy very seriously at Nicola Wealth. In looking out for the best interest and security of client information, we provide access to one accountant per accounting firm. If there is an accountant change, please let us know and we will ensure the appropriate client signed authorization letters are completed and the new accountant is set up for the portal. For new accountants setup or troubleshooting portal access issues, say a forgotten username or password, please reach out to our Nicola Wealth Client Services team.
Thanks, Mark. It's great to know that our client services team can assist with setup and issues accessing the portal. Perfect. Those are all the questions I have for today, and I certainly now have a better grasp on what to expect when discussing tax reporting with our clients. I hope that those watching have had their questions answered and feel better prepared for the next tax season.
Thanks, Lauren. It's important to note how tax slips incorporate into our fiscal reporting and to highlight the contents, timing, and location of the various tax reporting documents Nicola Wealth produces and provides. We at Nicola Wealth are proud of our fiscal reporting, and these reports have evolved based on client and accountant feedback we have received over the years. We are still, however, continually striving to make our client and accountant tax preparation as easy as possible, and we are excited to keep building upon our Nicola Wealth fiscal reporting.
Thank you, Mark, and thank you to those who have tuned into our fiscal reporting webinar. Best of luck with your tax preparation and filing. If you have any further questions, please contact your advisory team or fiscalreports@nicolawealth.com. On behalf of Nicola Wealth, Mark, and myself, thank you again for joining us today.
Thank you.